Welcome to the virtual roadshow series on Channelchek. Today we are featuring ELY Royalties Inc., ticker symbol ELYGF on the OTC Markets Exchange. Research coverage of ELY Gold is provided by Noble Capital Markets. Noble is a FINRA-licensed, SEC-registered broker-dealer. All Noble research is available on Channelchek. Following the formal presentation, Mark Reichman, the Noble Senior Analyst covering ELY Gold, will ask our presenter a selection of the questions received. The source of the questions will remain anonymous. And now, here is Trey, the President, CEO, and a Director of ELY Gold, to make the presentation. Take it away, Trey.
Well, thank you very much. Glad to be here today, have this opportunity. Thanks to the whole team at Noble for putting this together in the whole Channelchek operation, which is pretty innovative, we're finding out. So we're very happy to be working with Noble and on this, doing this presentation today. We start out with this slide, which kind of goes through a series of checkpoints here. You know, just to give you the 5,000-foot view. ELY Gold Royalties, a junior royalty company. We've been building the portfolio both organically and through royalty purchases for about the last 3.5–4 years. We are a Nevada-focused company and a gold-focused company. And when we get into the assets, you'll see that you know, we are not purchasing or creating royalties in commodities outside of the gold precious metals area. At this time, we don't have any silver assets. Not that we might look at something there, but just as because of that Nevada focus, really, and our secondary focus in Quebec and Ontario, we are 100% gold assets. The in the last 12 months, maybe 12 to 18 months, we've been actively purchasing royalties and have been fortunate enough to execute some transactions that have given us royalties on some of Nevada's largest and oldest producing gold mines. We've got 3 assets in the portfolio today that we think have the potential to grow to tier 1 assets, that being over 5 million ounces. And that's in the Fenelon, which is our Quebec asset, and Ren and Jarrett Canyon. And all 3 of those are around 2 million ounces today, and with the potential, we think, to continue to grow. The portfolio we've put together, and we'll get into that, how we've structured and generated the portfolio as we go through here. But just suffice to say that we're dealing with the top counterparties in Nevada. Everybody who's active in Nevada, from the major companies, the mid-tier producers, and some of the best junior explorers, we either have property interests or royalty interests with. We have, because of our execution of our business model, we've handily outperformed all the other royalty companies in the space over the last 12 months. And again, that's something we'll get into more here in the presentation. But you know, we also like to point out that while we have shown some great growth here, that a junior royalty company is where you get the most leverage. And historically, even the major royalty companies showed some excellent performance over their first 4 years in business. So like a royalty company, we operate with a very low overhead that gives us that great leverage, royalty company leverage to the price of gold. And where when the gold price goes up, our revenues go up, but our overhead does not. So with everything we put together in the portfolio, it's now over 100 properties interests, either in royalties or in properties that we have sold or have available for sale, making us one of the largest landholder property owners, certainly by number of projects, if not number of claims, in Nevada. This slide, it kind of tells, it shows the story that I was talking about. This is Royal Gold in Franco, Nevada. two of the major royalty companies. These charts are show their performance in their first 4 years in business. Needless to say, in the case of Royal Gold, this was 93 to mid 96, and in the case of Franco, 09 to late 2012. And they've gone on to be excellent long-term investments as well. But just showing that that in their first 4 years, as they were aggressively building the portfolio and at a size where, you know, literally every transaction moved the needle, they showed growth in the, you know, 3,200 to 3,700%. And so just emphasizing the point that while ELY Gold has, because of our execution, we've seen great price appreciation in the first year. We think we're just at the beginning of that 4-year historical process for a growing royalty company. This next slide, it does show that that appreciation in comparison to the rest of the royalty universe, which clearly has actually had pretty good performance as a group over the last 12 months, but we've kind of flattened the curve down there for the rest of the royalty companies with our performance. And we have seen a lot of that. We think, you know, it really started about this time last year when we had closed the Fenelon transaction and Eric Sprott got involved in the business, and we really started seeing the excellent results coming out of Fenelon. Then, you know, we had the acquisitions here at the beginning of this year and a very successful financing that have really generated those results since the first of the year for us. Quickly go through the structure here. 157 million shares currently outstanding, 197 fully diluted. All our options and warrants are currently in the money, so we quote our market and enterprise value on a fully diluted basis. With the current financing, we've paid down our line of credit, so we have that available at funds of $6 million. We have about 13 million, 14 million in working capital on the balance sheet, and giving us about $20 million of current buying power for new royalties, and structured today at about a $250 million fully diluted market enterprise value. The breakdown, of course, our largest shareholder is Eric Sprott with 26%, but our last financing, we did bring in some significant new institutional business, about 18%, or it's about 15%, excuse me, of new institutions we brought in. Just on the bullish long-term chart down at the bottom, the weekly, one thing we like to point out here is that while we've had some excellent price appreciation, we've also had excellent growth in the volume, and we think for any growing company on the equity side, you know, when you see price performance, very important that you see that supported by growing volume performance as well. Well, we're currently trading on average over 1 million shares a day between our two exchanges. You know, comparing us again in the space, I'm not going to spend a lot of time on this, but just suffice to say that the major royalty companies have the highest valuation, the most stable portfolios. The mid-tier companies have a bit of a discount on the valuation from the majors, as they, you know, have either some issues or more development assets. And then the junior royalty space where we're operating, you know, this is a group that typically will have a lot less cash flow. You're really looking at the future here over the next few years. What does their portfolio look like? And you know, so with that, if you have royalties that are going to be producing and generating cash flow, we're looking at net asset values that we can pull to today based on cash flows over the next few years. So when you're looking at these royalty companies in the junior space, we think And of course, these metrics apply to any business with a emerging company or a junior. The business model first, we differentiate ourselves because we both purchase and generate royalties through our property sale program. We've been doing this successfully for about 4 years, where we sell properties. We don't do joint ventures. We have a large portfolio of properties available for sale. We have about 22, 23 properties it is today that are in the process of being sold over a 4-year period. Those will all generate royalties if the sales are completed. But in our case, we don't do any joint ventures. There's no earn-ins to our property sales. They make all the payments, and we give them the property. They get a royalty. We get the royalty back. They give us the royalty. Otherwise, we get the property back 100% and able to remarket it. You know, management execution is another important point here. With us, we've executed 12. I mean, we've just this week announced a couple more, so it's really up to 14 transactions here in the first half of 2020. I mentioned the liquidity on the last stage, very important point. But lastly, you know, with the royalties and the mining side, one of the key metrics, and maybe the most important, is the path to production. It's that production that's going to generate cash flow. It's the cash flow that generates net asset value. And that's how royalty companies are valued ultimately, especially in the junior space. So we have what we call 11 key assets in our portfolio. These are all, 3 of those are producing mines and producing assets. And the other 8 will be producing by 2023. It's important when you look at the competition and look at a junior company. Of course, you want to look first at the project. You can look at PEAs and feasibility studies, that type of thing, and see, you know, what the asset looks like. Is it a mineable asset? Is the market is the capex reasonable for the project? And then secondly, you always want to be looking at the operator behind that. So with the royalty company, it's very important to not just look at the project, but look at who has that project. Is it a junior company that's never built a mine or operated a mine in the past, and maybe doesn't have the capital to actually build the mine? Or is it a mid-tier major company that's an experienced mine builder and operator and well-financed? And I think when you look at our portfolio, you'll see that you know, we really have our outstanding on portfolio with our counterparties. The overall portfolio, I'm going to run through here. I mentioned the 11 key assets. We then have 21 development assets. Now, half of these are probably royalties we've purchased. The other half are royalties we've generated through our sale program. And the key differentiator to our development assets is all the properties to be in this category have to be at or near producing mines or mines that are being permitted for production. In almost all cases of our development assets, those properties are also held by the company that's got the producing mine there. And so where this is important is that while we feel some of our projects here in the development portfolio could grow large enough to become standalone mines, they do not have to become that big. Our properties only, to be producing royalties, our properties just need to add resources to the existing mine plan and mine life to the production profile. And that's a key differentiator to our development assets. We then have 33 exploration assets. These are the longer term. Almost all of these have been generated through our sale program over the last 3 or 4 years. 8 of those are currently being drilled, and we've got some of the top junior companies operating in Nevada working on our properties. Most of these properties are seeing some kind of work, but as I mentioned, 8 are currently being drilled. We then have 34 properties in our available for sale portfolio, which we're always upgrading and adding properties to. Primarily, we get these properties through staking, ideas generated from our extensive database. This slide just gives you an idea of what I talked about our counterparties, the best of the best. The key assets we want to go through quickly. The three producing assets are on top. At the Gold Resources Isabella Pearl Mine, we have a 3/4% royalty and on the current production, and a 2.5% subject to a 1% buy down on all the expansion ground there that they're currently drilling on. At Jarrett Canyon, we've got both a per ton royalty on everything that goes through the mill and a 0.5% NSR. Jarrett Canyon will do about 140,000 ounces this year, growing next year to closer to 200,000. At the Rawhide, this is a mine that's been operating for many years, privately held. They're currently mining on our claims there, but this is a net profit interest royalty. So they are just working through the last of their allowed deductions for the definition of the net profit interest, and we'll start seeing payments off of our interest there late this year, first part of next year. They'll start. Fenelon, probably a lot of you are familiar with. Wallbridge Mining has just done an incredible job of quickly building that asset in a very high-grade underground deposit. They're currently applying for their small mining permit so they can continue the underground operation or exploration while they are producing. And so we expect that to be in production and see payments starting next year. Lincoln Hill is at the Coeur Rochester mine. It's part of their mine expansion plan with their new 300 million ton leach pad that they're currently permitting. That should be in production by 2023. At Marigold, these are two that we just picked up, two royalties we just picked up in the VK transaction. One is the Marigold. That's operated by SSR Mining, and our claims there are due to be in production in the current mine plan in 2022. The Wren deposit is at the Gold Strike mine, the largest gold mine in Nevada, operated by Nevada Gold Mines. Wren is the extension to the underground mine at Gold Strike that's produced over 13 million ounces now. The entire Gold Strike complex has produced over 45 million ounces. There's 2 million ounces have been outlined at Wren. We think there's the potential for a lot more, and they're currently in the development phase. The deposit there at Wren is permitted, and they're working to get that to development. We're projecting that in 2023. We also picked up a net profit interest on the Wren. We're just very excited about that asset, and if we get a chance in the Q&A, we can take a look at exactly where that property lies and why we're so excited about it. The last two are the Hog Ranch, operated by Rex Minerals out of Australia. Currently permitting that. It's about 1.2 million ounces in their recent resource. And then lastly, the Gold Rock project in development by Fiore Exploration, who's a mid-tier operator. They also have the Pan Mine nearby there. Their PEA is looking for production in 2023. So very important to look at that path to production as it applies to our key assets. 3 currently producing. One, Jarrett Canyon, currently has over 2 million ounces of reserve or resources, and it's been producing since the 80s. All of the others, with the exception of Hog Ranch and Gold Rock, are the only 2 projects in our portfolio here of our key assets where the mine needs to be built. All these other ones, we have no risk of on the permitting side, on the development side, on the CapEx side. The mines are built. We're just waiting in line, looking for the development of our claims and our royalties to come into production. And of course, the operators, again, the biggest gold mines and the best operators in Nevada. We're very proud of this key asset portfolio. That key assets is what generates our net asset value based on our cash flow, revenue outlook. 2021, you start to see that royalty income kicking in and growing each year. 2024 would show another 2 million as REN actually starts paying there in our current plan or current projections. Important here, we're doing about $2 million out of a year of revenue out of our sale portfolio. This is based on current contracts where we have about 21, 22 what do they say, 22, 23 now, kind of changes every day. So in that portfolio, these are under contract, and that $2 million there about covers our G&A for the year. So we're looking at revenue from the royalties, most of it having going to EBITDA, and starting in 21, all things work out according to plan here. We'll have a nice chunk of predictable royalty revenue to start a meaningful dividend program. I'll let you guys look later through, just to point out here on the overhead, Jerry and I are the only two full-time employees. We share Javier, Steve Kenwood, and Joanne with other companies, and our 3 outside directors bring a lot to the table for ELY Gold. We're very goal-oriented, achieved all our goals for 2019. For 2020, we set up these goals. We've moved our dividend program because of the COVID, moving some things back to 2021. But otherwise, we will have checked off all the boxes here by the end of this month, and we'll have to set some new goals, 2020 goals here at mid-year. So that's really it. That's our story. We think there's still a lot of upside in the junior royalty space, and we think we're a standout. That really the big move for us has just been to rate us up with our peers. For those of you who heard the story, we were significantly undervalued compared to our peers in this junior royalty space. But we're an aggressively growing company with outstanding assets in the best mining jurisdictions, safest mining jurisdictions in the world, and again, offer that pure gold leverage with our portfolio with both rising gold prices, where we see the revenues rise, and where we're also seeing increased project development and royalty opportunities. So with that, I'll hand it over to Mark, and we can see if we have some questions here.
Thank you, Trey. I'm Mark Reichman, the Noble Senior Analyst who covers ELY Gold Royalties. I will read the questions that have been submitted for Trey's response. So Trey, the first question is, has been approached by some of its larger peers with a view of combining the two portfolios? I see Maverick Metals as a very strong potential partner, as well as one with a very complementary asset base, and would love to hear Trey's thoughts on that.
Well, look, let's just say this. I mean, we're a public company, so we, that possibility, certainly always exists. We have not been approached by anybody at this point with the idea of a combination. But look, we think longer term, as we're growing, focused on North America, and that Nevada focus makes us, well, in fact, some of our royalties match up very well with the current portfolio at Franco-Nevada. But this jurisdiction, I just can't stress enough on, and this is where I think when you're thinking about our future and why another company might want to acquire us, there's a few of these companies, Mavericks wouldn't be one of them, but some of the other ones, they don't have any real, the majority of their assets are in much less safe jurisdictions. So that's something where we're going to offer a combined portfolio. I think you are going to see in the next 12 to 24 months this jurisdiction risk is going to become a major factor in the marketplace. So while we have not been approached, we are certainly have our the phone lines are open, and we think we are a very attractive candidate.
The second question is, going forward, do you want to maintain the gold focus or expand into silver and other commodities?
Look, I can tell you one thing about the gold business that I really like, and I've been with this company, for 10 years. The first half of that, or 6 years in the exploration and development company. The thing I like about being a gold company, a gold focus, and is that when the price of gold goes up, we're all happy. When the price of gold goes down, my shareholders don't blame me. They blame the central bank or Goldman Sachs or some other nefarious character for manipulating the price. So I like that. In other words, I don't have to make, and you won't see me ever in our presentation, making a pitch for why you should own gold. It's just an assumption for us. So we like the gold focus. I would look at silver, but silver is difficult because many of the silver mines, and if you can get a silver stream, it's okay. But if you get an NSR in silver and it's on one of these polymetallic mines like in Mexico, those companies are just getting fleeced by the concentrate buyers. And in an NSR, those fees that they call participation fees and penalties and that type of thing that all go into that fleecing would affect the cash flow and the revenues to the royalty holder. So far, and as long as we keep the jurisdiction focus, which is our #1 priority, is staying near to home here, staying in Nevada where we know, Western United States, where we have the database, and Canada, which is easily accessible and where we also have a large tax loss carry forward. I have a feeling we're going to stay mainly gold focused. One thing you won't see us do for sure is step out and buy royalties in other commodities. And I caution everybody when you're looking at some of these new royalty companies that are popping up, with iron ore royalties and the like, other, even the battery metals and stuff. I mean, I think one that's focused solely on battery metals might be a good play, but we're not making those kind of commodity calls.
The next question is, could you explain the evolution in revenue over the coming years? What is creating the growth you project?
Well, it's really our revenue projections are pretty much coming, mainly from the 11 key assets. We've got that little bit of revenue that is, that's coming from the sale portfolio, and that's pretty static, and we can back it up historically. We will probably do, like I said, in that sale portfolio, we'll see some contracts drop off that were done in 16 and 17 and 18 will start to drop off. But we have other ones where the payments are escalating and making up for it, and that's why you see that rather kind of static at $2 million. But that royalty revenue, as it kicks in, that's the big thing. Now, when you look at our, again, it goes back to that path production, because our revenue numbers are for the royalties are based on the cash flow from those royalties coming into production over the next few years. And very important in those that you look at, what's the chances of these things actually happening? Well, we're not making these projections as far as the production numbers. The companies are here. So you can go to each one of these companies and determine, well, if they really have a chance of doing this. Well, I think in our case, we're Nevada Gold Mines, SSR Mining Corp., Wallbridge, Jarrett Canyon, and then even the smaller producers, Gold Resource. The only one on this list that is not currently producing in Nevada, or in Wallbridge's case, in Canada is Rex Minerals, which is an Australian company. So we've got current producers producing in the area with mines that are well financed, and so we think we think we have a very solid path to production and thus path to revenue and cash flow.
The next question is, would a dividend paid too early hamper future growth? Has Trey debated simply pouring future cash flow back into buying more royalties?
Look, one thing we won't do on a dividend, and this is why we pushed it from 2020 to 2021. We think it's very important for a royalty company to be paying a dividend, but for us, we want the dividend to be meaningful. And for a small company, keep in mind that the cost of doing a dividend program, unfortunately, is it's not dependent on the size of the company or your revenues. It's dependent on your number of shareholders and the price to send out all those checks and set up the program and monitor the program. It's expensive. So we don't want to start it just to say we're paying a 1/10 of 1% royalty or a dividend and have a quote dividend program. We also don't want to be in a position where we're financing the dividend. So we want it out of predictable cash flow. And lastly, we want it to be a dividend we can increase. So, we think that going into next year as things, shape up here, we'll look at that dividend program, we'll evaluate how things are shaping up for 22, 23, 24, what new royalty purchases we've done, and judge it that way. Now, as far as, zeroing in on the question is, we are still continuing to see opportunities, but with $20 million of liquidity right now, we don't think that we, and increasing the revenue increases we're looking for next year, we think there's plenty of room to facilitate our acquisition program, which aggressive program. Remembering that our royalty generation program, those royalties we're not purchasing. We're actually getting paid to generate those. So, I think you'll see us easily next year. We feel like we will be able to satisfy both sides.
I'm going to combine two questions. First, would you tell us how Eric Sprott became involved in ELY and what you find so compelling about the royalty business model and why ELY Gold? And then the second one is, what has been the recent driver in increased institutional ownership?
Well, Eric contacted us through a broker in the early spring of last year, and at that point we had purchased a 1% royalty on Fenelon, and then added that with another 2% royalty. And Eric wanted to buy part of that royalty. So we made a very tough internal decision, which was ultimately to sell Eric a 1% interest in the royalty. That was contingent on him coming in and becoming involved with the company. That certainly worked out well as he became a larger shareholder throughout the year. In the fall, we did a deal with him on the $6 million convertible line of credit, so his interest continued to grow in the company and his ownership. And it is through his relationship with ELY that he began to really understand the royalty model, and that is that we're buying royalties at a discount to net asset value. In some cases, it can be fairly substantial if we pull off the right transactions, and then we're able to now put them into a portfolio where they immediately get upgraded to, currently for us it's 1 to 1.5 times net asset value. And so adding value in the royalty space by purchasing royalties and, has been, very intriguing to Eric. I now talk to Eric quite a bit about royalties, about projects that he's invested in and other royalty opportunities. And of course, then this spring, he sold us the 0.5% royalty on Jarrett Canyon. At the time he said, geez, Trey, you're stealing this from me, because he got 8 million shares of stock valued at, I want to say it was 62, 67 cents, something like that. Well, now I tell him, look, looks like you kind of took me to the cleaners, because your stock has at one point here, it had tripled, and what looked like, what started out as an $8 million transaction for that, at current prices, Eric had, more like $24 million worth of stock. So it's a great relationship. I can tell you, he's a fantastic guy to have as an investor.
And then what has been the recent driver in increased institutional ownership?
Well, look, I think we did a really good job. We did an all Canada offering, and we did it with Claris and Mackey. Did the book on that. We went out to raise 10 million, specifically targeting some of the small Canadian institutions that had come back into the marketplace. And, they did a good job of that, to where they had such demand that we increased it to 15 million and ended up doing 17.25 million with the shoe on that, the over allotment. So that brought in some institutional ownership. We think, and we can't tell for sure until there's filings, but a lot of times those institutions, when you can bring them into an offering at a price and the stock is showing strength, which ours was, they tend to buy in the open market afterwards and put on trading positions where they have that 4-month hold stock at this point from the offering. So I can't, and I'm not going on this call going to name names, but it brought in 6 really good Canadian and European institutional investors into the name.
Next question is, are there any exciting developments to look forward to in the third quarter and the fourth quarter? Well,
look, our key assets, I mean, I could go through them all, and I think what we're going to do ourselves is probably, we just did a town hall meeting. I think the next town hall meeting might be give us a chance to drill down deeper into each one of the key assets there and explain it. But we know that at Jarrett Canyon they're expanding and that's growing. That's an incredibly underexplored land package that Eric Sprott has there at Jarrett Canyon. We've been pushing him very hard to do more exploration property wide. We think it's 119 acres of some of the best unexplored land, lower plate rocks in the Carlin Trend. At the Wren deposit, I brought up the slide here so that people can kind of get an idea of what this is. This is the Gold Strike complex here. Again, the 45 million ounces, 33 million approximately came out of the open pit here. The underground mine is in this area right here, this thumb, if you will, going up to, and in the black and brown here is our Wren property. Now, Wren was, has not seen a lot of exploration, any exploration since 2010, when Barrick bought out the joint venture interest from Centerra, and Centerra had done the work there, outlining about 2 million ounces here at the JV zone. The initial hole there at discovery hole at Wren was 42.5 meters of 36 grams. Now it is very deep, but so what what we see is happening here on the development side, and we think some of that will happen this year, is that they are They're running out of ore here at the underground at Gold Strike, so they're drifting, they're tunneling in from the underground, from the Banshee mine here at the south. This post fault here, that is what controlled all the mineralization down here of the 45 million ounces. So, you know, we feel this is the only place right here, and other than a few other little red spots here that saw a couple of drill holes. And so what Barrick will be doing here, or Nevada Gold Mines, is drifting in from the south. They've got a permit to go ahead and exploit the ore that they know is there at the JB zone. They're also drifting in from the west, from the South Arturo mine into the northern part of Ren, and they're going to explore that from underground. So this is something we think over the next 12 to 24 months be very exciting here. Exciting exploration at potential at Jarrett Canyon. Of course, more exciting news we think to come from Fenelon, and you know, we think we think those would be some key drivers, as well as some new transactions that we have on the horizon here for more royalties or transactions to add to our existing key assets.
Well, that is all the time we have for today. Thank you, Trey, for helping us gain a better understanding of the Ely Gold Royalties story. If you would like to access our research on Ely Gold Royalties, please go to channelchek.com and type in the ticker ELYGF in the search box in the top left, check the channels section. Thank you for your participation, and watch for more virtual roadshows coming soon on Channelchek. Goodbye for today.